The Federal Reserve met yesterday and today to decide on interest rates, as well as providing an outlook on where they're going to take interest rates over the next couple of years. And the outcome was that they were going to leave interest rates alone. They were going to leave them at the same level. And they again said that expect 3 rate cuts in 2024. That is expected to be about 75 basis points down on their current interest rate, and expect more cuts next year. The news of interest rates staying the same and still projected to go down late in 2024 sent certain parts of the market rallying. The part of the market that rallied the most was small and mid cap stocks, which are more interest rate sensitive because they tend to be unprofitable. They tend to not generate free cash flow, and their valuations are just more affected by interest rates. That said, I wanted to take a look at small and mid cap stocks and provide some comments. It is an area, if you've seen my videos, that I expect is going to do really well in 2024. There's a couple reasons for it. First, I think small and mid cap stocks didn't do very well in 2023, and there's pent up upside appreciation in this particular area of the market. Most of the appreciation in 2023 was out of those mega cap technology stocks, the Magnificent Seven, and they represented 30% plus of the S&P. So when you look at the S&P, a big part of that is those big mega cap stocks. Now those stocks are beginning to show weakness. If you look at Tesla, it's down big time. Apple is still down year to date. And the Magnificent Seven, some of them have struggled. Some of them continue to flourish, like Nvidia has flourished, Meta flourishing, but some of them are not. And I think that small and mid cap stocks could really rally in 2024 to outperform the S&P, to outperform the mega cap stocks. In today's trading, the Russell 2000 outperformed the S&P, the NASDAQ, and Dow Jones. It's just one day, but it had a nice rally, almost 2%. And to see how it's done year to date, it has not kept up with the S&P. The S&P has outperformed the Russell 2000. You can see that the S&P year to date is up 10%. The Russell's only up 3%. A lot of good companies in the Russell 2000, but a lot of companies are unprofitable. So to put it another way, there's a lot of junk in the Russell 2000 that keeps that particular index down. But there's a lot of quality as well. Not too long ago, Airbnb was a small mid-cap stock. Not too long ago, Uber was in there, and I can go on and on. So really doing one's homework and finding those jewels that are in small mid-cap stock territory is really fun and very rewarding. Finding the right ones can really land big, big gains. If we look at the 5-year, the small and mid-cap stocks have kept up with the market at certain times. And if you look at in 2021, they were actually beating the S&P, which is impressive. But overall, over the last 16 months, small mid-cap stocks measured by the Russell 2000 have not kept up with the S&P. I believe that's an opportunity. That means prices for these smaller companies provide good discounts. They provide good PE ratios. They provide good value to an investor, and I'm a value investor. I'm invested in a number of small and mid-cap stocks. If you look at my channel, you'll be able to see which ones I own. And I'm going to continue to buy into small and mid-cap stocks, especially around healthcare, financials, technology. I'm going to continue to buy into those companies that I believe have a bright future. Looking at sectors, the number one sector for the past month has been energy. Oil prices are up. Energy company stock prices are up. Materials companies really rallied today. And companies that mine iron ore, produce steel, and so forth, really rallied today. Industrials, I saw 3M stock really rally today, and it's having a really good month. Of course, information technology, it's been doing great. It's the superstar sector for the past couple of years. Financials is having a really good year and a very good day today. Financials, I think last year were beaten up, and they have really performed great over the last 6 months. Communication services, that's where Meta, Alphabet, Netflix are. It's doing really well for the past month and did really well today. Consumer staples, very respectable, up 4.4%. Consumer staples tend to be fairly consistent. They don't go up too much. They don't fall too much either. And the S&P for the past month is up 4.3%. The lagging sectors, healthcare has lagged, real estate has lagged, and then consumer discretionary hasn't kept up with the S&P. I continue to be bullish and optimistic that healthcare is going to perform. Historically, healthcare does really well. Healthcare, especially pharmaceutical companies, they're very profitable. They generate great free cash flow. Healthcare payers like an Elevance, they get to hold a lot of cash that policyholders pay, big corporations pay to get their employees insured. And they get to work with that capital and earn lots of money on top of that capital. Very high producing, cash flow producing companies are in healthcare. And I continue to buy in what I believe are discounted prices. For small and mid cap stocks, I have probably 5 or so companies that would be smaller mid cap stocks in healthcare, but I have companies pretty much in every sector that I'm buying small and mid cap stocks. My channel has them on videos. If you want to look at my channel, you can cherry pick companies that interest you. And I'll share with you what I think those companies are about, how I value those companies, and what my intent is in with that company, whether I'm going to be buying shares, just holding, or selling shares. The bull market we're in has really surprised me as to the stamina that it's had, just going up and up and up. We've been going up for 5, 6 months to this point. It's been a fun ride. Now, I'm an active value investor and I continue to buy shares in stocks. And I believe that at any market, you can always find a stock that is discounted. And especially on pullbacks, it's an opportunity to add shares to a position. I tend to average in my purchase into companies that I really believe in and will own for a long time. An example is Meta. I've been buying Meta stock for 5 years, and my initial shares, I'm at a great gain. Some shares, not so much because I bought probably at a high point in 2021. But overall, it's just been a fantastic winner. And that's my approach: be an active value investor, find companies that I really believe in and want to be a long term owner in, and then over time, buy shares every week, every market, there's an opportunity to buy shares in a company that is discounted, is misunderstood. And that's what I'm looking for to make my portfolio stronger. If things hold up, it looks like we're going to open tomorrow in the green, and this market can continue to rally. It'll be fun to watch it. But now that we've had the Federal Reserve meeting behind us, I don't see any big news that can pull us down unless a lot of people decide to sell, and then we'd have a pullback. You never know when that's going to happen. I'd be surprised if we go another month or 2 months without a solid pullback where we see stock prices go down 5 to 15%. We will see. Thank you for watching the video. I hope you found it interesting.